What's up, y'all? So we're back, and I was thinking about, if somebody was to ask me what they could do to immediately see a difference in their trading, what would I recommend? And so I came up with with a few things that I think would be beneficial to somebody in that situation. Now, of course, this is speaking that, you already have a proven strategy, right? But maybe you are having some troubles in certain areas, and you could already be doing these things, but you might not. So that's why I just want to point them out. There's some tips to just help you in your trading, right? Especially if one, you're new. These are things are really good if you're new, or even a mid-level experience. But there's definitely some things that even if you've been trading forever, I mean, maybe some of these things that you're not doing. Um, so yeah. Okay. So let's do it. Let's do it. So let's dive right in. So I think one of the first things I want to talk about is is um is news, man. People do not give it enough credit. News can kill a trader. Absolutely. It absolutely can kill a trader. And I know there's folks out here that they trade news, right? They trade news day in, day out, and that's fine. But if you're, for example, if you're a trader that is on, say, a prop firm, um, a lot of them have rules around you cannot trade the news. You have to be, the only way that you could be trading the news if you are already trading the strategy you typically trade. So I mean, they can look at the data and kind of start to formulate, how you taking entries, and if something was, you're trading the news, right? And you got to think about, why would they not want me to trade the news? The goal is they want you to make money, right? They want you to make money. Well, not all of them, but the legit ones want you to make money because, most of them are, either copy trading or making a percentage off of your gains or whatever, if they're actually putting you in the real market. So, the goal is for you to be a consistent trader, you to be consistently profitable, for you to show that you know how to manage risk. And a lot of times news trading, it becomes a whole gamble, right? It becomes a gamble. And the reason it becomes a gamble is because you could go on the chart and you could have done your analysis and everything lines up with the technicals. If you do technical analysis, everything lines up, and you're like, I know this has to go up, right? Everything lines up. And then guess what? The thing shoots down. And why is that? It's because the news, depending on what that looks like, maybe the news was really bad and it drove that index down, right? Or even there's been times where I've seen the news came out and it was very positive and the market still did the complete opposite of what you would think it would do, right? So I think a lot of it is you're kind of gambling, right? And in the whole risk department, even if you have the stop loss, right? You got to think, so many people are in this market, and when that news comes in and it's that really high impact news, the market tends to move, right? So it moves quickly in one direction or another. And so a lot of times those stop losses that you have in place, they don't get recognized, right? There's this slippage that happens. And so even though you had to stop and to protect yourself, you might not be getting taken out at that stop. And it's like, you can't go complain to the broker, because the broker's going to be like, I filled you with the best price that I could, right? So that's why I say don't trade news. But I want to show you an example so you can kind of understand what I'm talking about. So let me go ahead and share you my screen. So here's Forex Factory. There's a million different news outlets that you can use, but I typically use Forex Factory. I've been using it for so long, and it gives me what I need. So I use this, and one tip is I turn on the filter, and I only filter for USD because I trade YM or US 30 on the future side, right? So I just look at the US news. So I've got it filtered to that. So, let's say if you're a Forex trader and you trade Euro USD, for example, then you'd want to filter this and make sure that you're also, including news that's relevant to your particular currency. So anyway, so let's take a look. So this is this week. None of the news this week has really been that impactful. It hasn't been like a big issue. But if we go back, right? If we go back, because last week was pretty decent as well. But if we go back, okay, here, CPI. CPI is one of those news events that is usually pretty significant, right? It usually has a nice impact to the market in terms of being able to, quickly move the market. Now, it doesn't mean that, it's always this drastic move, but it typically, moves the market pretty good. And if you want a list of different news events and what they typically do, if you subscribe to my email list, I will send it out to you for free. So continuing on. So make sure you just, shoot me a note, or you can comment, in the chat, or write me on TikTok, Instagram. I'll send you out that list. So CPI. So I went ahead and I pulled a chart up here. So if you go to 15, so let me see. So CPI, this news came out at 8:30. So on the 15th, and I'm on a 15-minute chart right now, guys. So on the 15th, you got 8:30 here. Look at this candle, right? So if I measure this move, here, so I mean, we're talking about, all the way to the wick, we're talking about 200 points, guys, in a 15-minute candle. Like, matter of fact, let's go down to 1 minute and see what is the largest movement we had there. Let me reset this. What was that, the 15th? Hopefully we can get back that far. We might not be able to. Let's see. Keep going. Oh yeah, we can't get back that far. That's cool. So anyway, we'll go back to the 15-minute. But essentially what I wanted to show is, what were we on, May 15th? May 15th. Where are we at? Okay. Yeah, May 15th. So this 15-minute candle, this was the 8:30 candle, guys. And that thing just skyrocketed. So let's say that you did your analysis, right? And, if you had, set this up for a long entry, which I remember looking at this, but I don't trade around the news. But if you had take a long entry here, right? And let's say that you said, oh, I'm gonna keep a tight stop, and I'm gonna set my stop below this candle, below this little bit low below that candle, right? You would have ate. But let's say that your analysis said, oh my goodness, this is good. This market is gonna short, right? And so let's say that you took this entry, right, and you kept a stop below, above that high, right? And let's say maybe you were targeting these lows down here. This candle would have blew you out the water. And I can promise you, if your stop was here, here at this 39,636 level, it may not have got filled there. You might got it taken out a little bit later and a little bit higher, right? Which means you would have realized a greater loss. So essentially, I think that's, one of the first things is, unless you are okay with the potential that things really may not go your way and you may not get your stop fill like you want to, just stay away from the news. Just do that. If it's a high impact news item, stay away from it. Again, all of the news items that say high impact really aren't that volatile or really don't impact the market like that. And I have a cheat sheet, guys. I have a cheat sheet. So if you're interested in a cheat sheet, make sure you get in touch with me and send me your email. But you also can go over to my site. So it's monturismo.com. And so, right now we're working on what we're actually going to be sharing with you, but there is a place where you can subscribe and you can put your email address in, and it will put you on my email list, so I can send you that information. So but otherwise, like I said, write me directly and I would give that to you. But that would be the first thing I would say. Make sure you at least check the news. But if you're new, I highly advise don't trade the news. Make sure every time you come to the market, you go and you take a look and see what news is coming up for the day. Like, a day like this, I would have either, been trading much earlier, or I would have waited till after the news has passed. I would even say, if we're talking about time of day, if you are, say, a US 30 or YM trader, right? You trade one of the index or something. I would also say it's probably wise for you to stay away from that opening bell time as well. A lot of times you can ride the momentum, but again, if you're new and you're not really confident in your skill yet, or you just prefer to be in a market that's more stable, like don't trade opening bell, don't trade news. Wait till the market has made that big push and now it's kind of realigned, and then get in the trade, right? I like to a lot of times trade earlier in the morning, so sometimes I get what I need before we ever get anywhere near opening bell, right? And then I'm done for the day. But otherwise, unless I'm just feeling really good about an entry, I don't trade around opening bell, because I don't want to be caught up in that, right? Because a lot of times you'll see an opening bell, it'll make a sharp move in one direction and then go the other. Sometimes it'll just open right up and just take off in that direction, but you just don't know, right? So, in order to be, I guess, a little more, protective of your capital, you just stay out. Right? So let's see. What else I got? So the other thing I would say is understanding where you are in the market, right? So, and I say this because if you are, trading futures or whatever, then you got to be out the market same day, right? That is the requirement for most of these accounts, unless you've got like a substantial amount of money in there and things of that sort, because you gotta have enough margin, right? So essentially, if you're day trading futures, you're going to be out same day by 4:45, depending on who you're trading with, right? Some brokers you might have to be out by 4:10, 4:15, 4:45, whatever the case may be. So you need to check your broker, confirm that. However, in the case that you're trading like that, that means that you're probably a scalping, or you're trading on a smaller time frame. So you're most likely not trading on the daily time frame. You're most likely, there are definitely opportunities on these time frames that you can get in and out in a day, but it doesn't always happen. So most likely you are trading something a little bit lower, right? You might be taking entries on a 5-minute, on a 15-minute chart. I even see a lot of people take entries on 1-minute charts, which I was, but I'm back to my entries are on 5-minute charts. So regardless of where you're taking those entries at, you got to make sure that you are looking at things from a higher time frame perspective. In other words, know where you are in the market. So a mentor that I had, he's a swing trader, right? And my thing was like, I don't want to swing trade. That's what I told him. Like, I don't, I'm not really a swing trader. I like to get in and out of the market. I don't like to just have trades open. It's just, and maybe someday I will like that, but right now I just don't, right? I like to just get in and get out and then be done for the day. But of course I still like meaty moves. I'm still, looking for that 50 points, sometimes even get 100 points or whatever. But the reality is, the guy, he told me that you can do that, right? You can trade on that lower time frame, but you better know where you are. And so that is what I want to pass on to you guys. You got to know where you're at. So, for example, I'm going to show you. If we let's go to the daily chart. We'll go to the daily chart, and this is what I'm going to say here. So if you see, we have just been trending down since Monday, May 20th. This thing has just been trending down, right? So imagine that you got caught up in something here, right? Trying to buy here. You're buying at the top, but if you got caught up trying to buy here and the market just turned around on you, like what would you do, right? But if you had been looking at this, you would have seen that this top over here, and that now we're back at all-time highs, right? We're back at all-time highs, right? And when this market turned around, for example, where is it going, right? So where is it going? So if you mark out some of these levels, right? For example, you got this level here. So if you mark this out, and I'm not being precise right now, I'm just trying to give you an idea. Well, let's say you mark that area out. Let's say that you mark this area out, whatever the case may be. Maybe go down to a 4-hour time frame, and you're able to find some other zones in here. Like, look at this one. Look at this one. So if I came into that market looking at a daily time frame, right, where are my areas of interest? Okay. So now that I know these things, I can start to trade in between those ranges, in between those zones, versus, let's say that you don't mark things up from a higher time frame, and then all of a sudden you're wondering why, right? Let me see real quick. Let's look at this bounce right here. I want to look at this bounce. This bounce that happened right here, right? We marked this zone up on a 4-hour time frame, right? So just think about this. Just think about this. Let's say that you came in here and these are days, right? Like this candle came in here Thursday. We got Friday. It didn't even start making its move out of here till Tuesday. So if you came into this market, right, and let's say, Thursday you came in and essentially you were like, oh yeah, this market's about to sell. You know what I mean? Let's say you took this entry. This is around opening bell, right? So, you're getting close because this is a 4-hour candle. So let's say that you decide to take this entry like, oh yeah, this thing is going down. If you had marked this chart up and you saw this area here, you wouldn't be so quick to take that sell because it is a zone where price is going to react. And it could continue breaking through as it did, but initially not so. Decisions are being made here. You know what I'm saying? Like in this area, you see, guess what? Right here, buyers had control. But before that, there was some conflict. The market was indecisive. Right? So you got to expect it to do something similar there. You got to expect it to stutter a little bit, but you wouldn't know that if you just went down and you just said, oh, I'm just going to trade on a 5-minute. You wouldn't see that. Right? So that's my thing. You just got to know where you are in the market, right? And then you can trade on the lower time frames. It's key. One of the biggest things is backtesting, chart time. You have got to spend time on the charts. So this is what my advice is, right? So my advice is, whatever the strategy is you're going to do. And I'll probably do a video to really go into how I backtest. But the quick and dirty is whatever strategy you're planning to do, right? They're going to write down what that is. What are the exact rules? What are the exact criteria that you're going to use to be getting in these trades, right? You need to know that. And then from there, you are going to go onto a chart and you are going to first, we're not going to be back testing. First, I just want you to go and mark out all of those trades. Pick a date, go back to that date, mark out all of the trades that would have been taken with the strategy that you have identified, right? Mark them all out, right? And usually the ones that you're going to mark out, when you're not like in an actual true market mode, the ones that you're going to mark out are ones that are very easy for you to see, right? Because a lot of times we can see what the market's doing after it's already been done. So you're going to mark those out and you're going to see, okay, this one would have lost, this one would have won, this one would have won. Here's, how much the range was. You start to see some of the tendencies. How many pips do I tend to get? I'm sorry. It depends on what you're trading. How many pips or points do I tend to get? How many, what's the time frame typically that I have my profitable trades or meaty trades or whatever the case may be. You're just gathering data here, right? Because as a trader, you are, you're not only responsible for, manage your risk, you're also you're responsible for picking out the best quality trades, right? So that you can be consistently profitable. So I would do that. And then to follow that up, I would, let me show you. So if you don't have TradingView, I definitely recommend you get TradingView. Um, but what you could do is there's a replay button up here, right? So you click that, you click the replay button, and you can drag this back to where you want to go. So let's say, okay, well, I just want to replay this week, right? This massive downtrend started. I want to replay this and see how I would have capitalized on this, right? And so I'll just click there. It's going to get rid of everything. And then, you can play it. You can just press play and let the candles form. Or what I like to do is I like to just step through it, right? So, come in here. What would I do? I would mark, I mark up my chart or whatever the case may be. And you could flip between the time frames. So if you mark up your chart on an hour, you mark up the chart on an hour, right? And then you could go to whatever your entry time frame is, and you can scoot through those candles and start to see, okay, here's my entry, press play. Let's see what happens, right? Because the thing that is going to do is now you are simulating a live market. You are simulating a live market. And so once you start simulating a live market, in that case, you will start to kind of practice some of the psychology bits, right? Like, no, you don't have money in that kind of skin in the game, but you're seeing the candles as they're starting to paint on the chart, which is really, really critical, because so many times people come and they've done all the back testing and all of that. They got the strategy outlined. They come into the live market, and as those candles paint, man, it can be intimidating if you really haven't worked on yourself mentally and you're not following your rules and things, because you got to be able to follow your rule even when it loses, right? So yeah, you gotta you gotta do it in a live market as well. So this is a way to do that without actually having to wait on time to pass, because just imagine trying to, okay, well, I'm just going to be in this live market for a week. You can do a lot more processing information here, right? So, Saturday and Sunday, you go and you just do your replay mode, back test. There also is an application like that you can use, which I have a license for. It works for MetaTrader. I actually have to go and see if they've got it for anything else at this point, but it works for MetaTrader. I'll see if I can find that link. If I find the link, I'll drop it. I'll drop it in the comments or whatever. But essentially, it's really good as well, and you actually can, do the live money thing, or I should say the simulated money thing with it. So yeah, you got to back test. You have to back test. You got to do that chart time. I would tell you, I am obsessed with looking at the charts, and every day when the trading day ends, I'll go back and I'll look and try to find any opportunity that I missed, right? And the trades that I took, I'll look at them. If it was a loss, I will look at that trade and figure out, why did I take that trade? Did it meet my rules? And if it did, why did I take it? You know what I mean? Like, why did I take it? And what could I have done differently? And if I had followed my rule, would I have won that trade, or would I have actually not even been in that trade, right? So those are the kind of things that I like to do, and that I definitely recommend. Now, the last thing that I would say is you got to track your trades, guys. And I am infamous for not doing this, but I tend to use a lot of platforms that kind of are tracking my trades for me. So since they're tracking my trades for me, I kind of can just take that information and do what I need there. But I mean, you can use some of these platforms. A lot of them charge, but you could do something as simple, guys, as you take your notebook and you just write that stuff down, right? You just write that stuff down. All the entries that you took, if they were profitable or not. Make sure that you document the date, the date, the time, what direction it was. If you're using different strategies, then I would say make sure you document that. Although I would recommend, if you're going to use different strategies, use different accounts, right? So that you really can see what the true performance of an account is, understanding, your drawdown and things of that sort. So I also can drop you a doc for that. Just shoot me an email and I will make sure you get access to that document. Because you can keep it digitally if you like. I tend to like writing it in my notebook. I don't know, it's something about writing it down that feels a little bit better to me, and it's easier to keep up. Because when I go somewhere, I would just take my trade notebooks and I just dump them in my my book bag, and I have everything I need with me, and I can open it up and look at it. Something about being able to feel that paper and just write with that pen, man. So you got to document your trades, because what you're going to start to see is some trends in your trading. You're going to start to know whether you're following rules, right? But what you're also going to start to see is, are there certain days where I just don't do well, right? Are there certain times of the day that I just don't do well? Then stop taking a trade during that time, right? If every Wednesday, because they call it reversal Wednesday or whatever, but that's not always the case. But I mean, a lot of times there are a trend change or whatever. But let's say that every time you realize I suck on Wednesdays. Well, guess what? Just stop trading on Wednesdays. You just cut out some losses, and now your gains are even higher for the week, for the month, for the year, right? So we only can see things like that through our documentation. And I'm not always great at documenting. I really truly admit that. Like, I'm not always great at documenting, but I realize that it is valuable, especially when, one, you're working on a strategy, but two, just to figure out who you are, right? It helps with who you are. So that's really what I got for you. So just to recap, so we said check the news, right? Let's check the news and be very conscious about, hey, at 8:30 or 9 or 10, whatever it is, there's news coming out. If I'm gonna take this trade, I need to realize there is that risk, right? Also, if you're trading things like indexes, I would say, like indices, I would say make sure that you're not trading around opening bell. If you are trading opening bell, make sure you have a strategy that you're comfortable with, and you are using proper risk management. I think it takes stress out of it to just not trade it and just wait till the market settles or trade before it. Understand where you are in a market, right? So regardless of whether you're scalping or not, make sure that you understand where you are on higher time frames, because those rule. Regardless of not being a swing trader or not, the higher time frames still rule. Make sure that you put in chart time, that you back test, because the only thing that's going to get you closer is seeing the data, right? Processing these charts, regardless of what you trade on. If you trade candlesticks, wrinkle, whatever the case is, you need to be on the charts, and you need to you just need to be practicing. I mean, think about your favorite athlete, right? Like, they are practicing their craft day in, day out. They're keeping themselves fresh, and that's essentially what you're doing. You're training your brain to be able to read this market, because we've got to train that subconscious mind. So when it comes in this season, it becomes second nature. And if you realize, a lot of traders, like, you'll be like, man, how do they do that? Because they'll be trading a strategy, but there's something back there that says, oh no, I'm not taking that trade. But that's that subconscious mind that's been trained and has seen these things a million times, and is processing that data, and it's only coming from that repetition, right? So make sure you're spending time on the charts. And then the last thing, of course, was tracking your trades, making sure you're able to see the trends in your trading, how you're performing or not performing. So that's what I got for you. I appreciate you tuning in. If you need any help with your trading, please let me know. I really want to make sure that I give as much value as I can and help others, because it's a lot of folks out here that I would say are more concerned about taking from you than giving. So that's kind of my goal, is to give what I can. And I got some great things coming. So stay tuned. I will see you all in the next video. All right. Peace.